All right, good afternoon, everybody, and happy Friday. Thank you for tuning into this video. This is the first video of a series where I'm going to document my process of trading prop firms, trading on prop firms, and specifically futures. Right now, we are starting with a fresh account. I bought this account yesterday, and today is my first day trading on it. As you can see on the screen, we ended with a $232.43 profit. So it's nothing crazy, but little wins add up over time. Right now, I'm just in the trading combine. So once I hit the 3K profit target, I'll be able to request payouts. So this video is just going to focus on the trades I took and some reflection and things I'm going to do better next time and things that went well. And so without further ado, let's get started. So I'm going to start with first two trades. I'm going to go down here so you can see the trades that I took. I'm going to start with MES. All right, so the strategy I like to use is the opening range breakout. And for those of you who don't know what that is, what you do is wait for, let's say, first 5, 15, 30 minutes of the trading session. And if you get a breaking price above or below that range, then you take a long or a short trade respectively. Personally, I use a 5-minute ORB, opening range breakout. Some people use 15 minutes. I am comfortable with the 5-minute. So yeah, I mean, you can ignore these lines here. What I have is 2 lines drawn that represent the high and low of the first 5 minutes of trading. Now, based on the crazy day we had yesterday and the price action we were seeing earlier today in the morning, had a bearish bias. So I was looking for short trades. I entered at the break of this 1-minute candle here. I use a 1-minute time frame, by the way, for our entry. And so once we had a break here, I went short, and that worked for literally a couple minutes, but then price shot back up. When I trade the ORB, my stop loss is at the midpoint of the range, and my target is it's like the distance of this range below or above. So my target was down here, but price never got that low. So I ended up getting stopped out, and that's what resulted in the $187.50 loss at the beginning of the session. 10:05, my idea here was we test this low and get a breakdown, but in this case, price just shot right back up, and I got stopped out again, which isn't good. Actually, no, I didn't get stopped out. I sold this one for $15 profit. Had a wick at the midpoint, but I guess technically I should have been stopped out there, but decided to wait for price to go back down and sell because price action was so volatile today. Afterwards, I took a trade on gold. Which I'll show you. There we go. Okay. Here did not have opening range indicated. I use Thinkorswim for my charting in a lot of cases. Here at 9:30, we have our opening range. I missed this move up before. My plan was to wait for a retest of the high, this 5-minute high, and take a bullish entry. But it was a lot of choppy action up there. Kind of made some money on that trade. If I was just targeting, let's say, was it 59 or 40.60 to 40.67, say 7 points, I could have made some money. But once I saw price go down, I thought, well, maybe gold's gonna do a major breakdown to the downside. I didn't jump in immediately once I saw the break, the 5-minute low. I put in a limit order up here around 40.60. Let's see what the entry was. Entry 40.57.7. Yeah, I put a limit order right here for a short, but this candle just kept moving up and up, and this is the other losing trade for today. Not sure how I feel about using limit orders to enter trades. At least for a break and retest, it's better to see how the price action reacts once price reaches a certain level. So it's something I'm going to keep in mind in the future. And then after that, we had 3 more trades on MES. If we go back to where we were, I think at this point I was still looking at short entries. So at 10:50, I was looking for. I was going for a break and retest trade because we broke out of this 5-minute range again, went back up, and retested the low twice. For these 2 trades, got didn't hold all the way up to the stop loss or down to the take profit. Originally, I had over $300 in unrealized profit from my short that I held down here. My target was this low of day, But after these two candles printed, things just shot back up. And so that aggressive move just made me want to get out of any short trades, including the fact that now we had a confirmed double bottom, triple bottom. So I didn't feel comfortable holding shorts anymore, and I sold the shorts here at a small profit, and 1058. And same here. And in retrospect, that turned out to be a great decision because we shot up. And that's when I decided to eventually take my long trade, which was the most profitable trade of the days by far, over $536 of profit. What made me go for that trade was the fact that, as I mentioned before, we see confirmed double, triple bottom, and we had price cross above the 25 EMA exponential moving average. Got in the longs at around 11:26, so around here. My target was up here, which is about 20 points above the high of the opening range. And this is where I ended up selling pretty much. My exit price was 66.15, so yeah, right around here. So that was a very successful trade. And looking back, realized I could have made a lot more by holding on to those longs, but it's better, much better, just to stick with a process rather than trying to squeeze every dollar out of a trade. That's my experience, at least. So those are the trades for today. Okay, as for some things that went well, didn't go well, and let's start with what went well. I had a good experience with using stop loss orders and limit orders to exit trades. If you have stop loss, then makes it easier to get of losing. Now, if you're just doing it manually, like I had been doing before, then it's easy to tell yourself that you should hold on to trades for longer than you should, which ends up losing you a lot of money and blowing your accounts, which you don't want to do. So I think moving forward, setting a stop loss is the way to go compared to manually exiting trades, and also having a limit order based on your take profit. That also works very well, because having those two prices set in stone, set in place, makes it easier to stick to your plan, to follow your process, and that's one of the most important aspects of trading, right? And that also resolves the one or two most common mistakes that traders make, which is holding on to losing trades for too long and cutting winning trades too short. So Yeah, setting those two orders is really beneficial. Even if I'm not necessarily setting the trades and leaving, it's still good to place those orders and watch the charts and see what happens. And as for one thing that did not work, using limit orders to enter trades, specifically for the break and retest. But the issue is that, well, based on something I was talking about before, but when you are using a break and retest strategy, you need to see how price reacts once a key level is reached. In this case, referring to the opening range low and high. So you have to see what happens at the low and high. A break and retest strategy doesn't mean you just blindly buy at the high and sell at the low. And this is what caused my losing gold trade. Go back to the gold charts. And by the way, all these trades are taken with 3 micro contracts. Okay, so here, my thought process was, hey, I'm gonna get to sell a couple micro contracts up here for the move down, but that didn't happen. You can see price just moved aggressively up from this low here. And if I had just been watching the candles form and seeing and observing the price action rather than just blindly setting a limit order, then I probably wouldn't have taken this trade in the first place, and I would have ended up with more profit. So I definitely think entering trades manually is still the way to go. Something else that's been on my mind is just the current volatility of the market. With volatility comes a higher potential profit, but that also brings higher risk. So moving forward, at least for the time being, I might size down. We'll see. I might have to widen my stops and widen my take profits as well to account for the extra volatility. One thing that you learn as a trader is that different markets require adjustments to your strategies. What might work in a low volatility market might not necessarily work in a higher volatility market. So it's always important to adapt. All right. Moving forward, I am going to stick to the opening range breakout strategy as the main strategy, and I'll make a video on that. But I'm also continuing to explore it and refine it. For now, I'm going to stick to the 5-minute opening range breakout, but I'm going to explore some other variants as well and see how they perform. And that's it for today. Again, we're at a realized profit of $230, which is not huge, but little by little we'll get to where we need to go. There's no rush, right? If you size too aggressively, then you risk blowing the account. All right, well, if you made it this far in the video, I want to thank you for spending your time and supporting this channel. Please hit the like button, subscribe, because I have a lot more content planned that I think you'll find very useful and interesting. Thanks again and have a wonderful weekend.